Happy Friday, and I'm Betsy Phillips, Baird and Warner, and I'm here for my Friday afternoon chat. And today I am super excited to have Jenifer Aronson with us. She is a certified financial advisor with her own company, Mosaic FI. She's been doing this for a long time, and of course, she's fabulous. So, Jenifer, welcome.
Thank you
And
for having me, Betsy.
oh my God, how do we manage wealth in the middle of a pandemic that is lasting more than 3 months?
Yeah.
Help us.
Yes, that I've gotten lots of questions from many clients and friends and colleagues. What do we do in this environment? First of all, I would say the biggest question I get is, why does the stock market continue to go up when what's going on in terms of the economy and unemployment, and is the numbers just continue to look worse and worse, yet the stock market we had this huge dive in February and March, and ever since then it's kind of been climbing back up, and in some segments of the market gone is even positive for the year.
Right.
And so it's very confusing to a lot of people. I would say there's a few things going on that are causing that. First of all, people like to equate what's going on in the economy with what's going on in the stock market. And the reality is the stock market is a forward-looking mechanism. So it's trying to project out really, sort of indefinitely how to value these equities and all sorts of different instruments. And so it's trying to look past what we're experiencing, what we're going to probably experience for the next year. And so there's that element. And typically the stock market sort of bottoms out about 6 months before the economy bottoms out. So it's about 6 months before you hit the bottom of the recession in an economy and it starts recovering. The stock market typically bottoms out 6 months prior to that. The other thing we have going on is really an unprecedented activity from the Federal Reserve and the Treasury as well, in terms of stimulus to get the economy recovered. And that's sort of the Treasury's job, and the Federal Reserve has put in, like I said, unprecedented historical amounts of money.
So correct me if I'm wrong, but that's sort of like what's going on in the real estate market. If the federal government wasn't protecting mortgages and pumping and lowering these rates, you'd see a major crash.
Exactly.
Because there'd be people foreclosed, they wouldn't be able to borrow money. And that's why it's important to stuff this money into the economy right now until the pandemic.
Exactly. And the real estate market's actually a good analogy to, get your head around what really is going on in the markets when the Federal Reserve, this enormous buyer of assets, comes in. It's kind of like, a city or a town or whatever where real estate has not been doing well, and not much transacting is going on. If you all of a sudden had this huge buyer that every time a house went up on the market, this guy just came in and bought it, all of a sudden you would have a nice vibrant real estate market, right?
Right.
That's sort of a good analogy of what we're experiencing. And you might think, well, God, that doesn't seem right. And isn't this a bubble that's about to burst? Well, the Federal Reserve's got a lot of ammunition, and they have the balance sheet where they can actually hold on to these securities for a long time until the economy recovers and things stabilize. And in fact, in 2008, after the crisis, they did it much slower. And that's why we had a more protracted, prolonged,
Recession
sell-off in the market.
Yeah.
Was because they were kind of creating this as they went. In March, the Fed came in and boom, started doing all the things that
Printing money.
Exactly. So there's a lot going on that's kind of creating this strong stock market.
So is now a time, if you have cash, to buy in, or should you hold your cash and wait for it to, because now it's high again, should you?
Well, I'm not a believer in trying to time the market. I don't think that
that goes, excuse me, I don't want to interrupt, but I am. That is true for the real estate market as well.
Yes.
Because if you try and time it, by the time you figure it out, it's too late.
Exactly. And that's exactly the argument that I would make. First of all, if it's money that you need within the next 6 months or a year or even 2 years, it should not be in the stock market, or very little of it should be in the stock market. It should be in a much more conservative investment. But now if you're investing for a longer time period, then yes, you should be investing. Not because I think the market's going to go up another 10-15% this year, but because I think over the longer time period, you can expect to get positive returns from the stock market. So it's very, I think it's, you have to look at your buckets of money and make that decision of whether you should invest or not separately.
So just one question about buckets of money. Like people, like they look at the stock market, everybody's 401k is not, is it all tied to the stock market, or, so you could have a 401k that has, the stock market could be dead, but you could have investments in other areas that has nothing to do with the stock market.
Yeah, absolutely. And hopefully, I mean, maybe if you're in your 20s, or even 30s, early 30s, then put it on the stock market. You're not, if it's your 401k money, you're not going to be touching this money, hopefully, for 30 plus years to come. And so you have a very long time horizon. But for the rest of the world, as you get a little older and that time horizon starts getting smaller, having some exposure to the bond markets is a prudent thing to do, that most people will do, even if you're in a target date dated fund that's investing for the long term. They're going to have some bond exposure in your portfolio. And in fact, the bond market has done incredibly well in this environment, because what happens is when stocks get volatile, bonds usually do well. And that coincides with the low interest rates that we're experiencing, is because the bond market has performed so well, which drives interest rates down.
And so I was just going to get to that, the interest rates. What do you see? I mean, we hear the lenders are always telling us what they think. What do you see as far as them staying this crazy?
I do think that we are in a period of low interest rates for kind of the foreseeable future. I'm not going to project out 5-10 years because nobody.
Oh no, but like within the next.
I would say for the next year, without a doubt, interest rates will remain. I mean, they
could go up a little here or there. They might go up to 3.5 or 3.75 or even 4, but they're not going up to 8.
No. That's just, yeah, it's not in the cards right now. We've got to get through this pandemic, and then we have to recover from the pandemic. And the Fed has actually made it very clear that they are not going to be raising interest rates for years to come, really.
Good.
Now, we all can make statements and then life happens, with things that we can't predict. But, the only risk to that statement is that for some reason we get this spiraling of inflation. And then that kind of becomes a game changer. Given the environment we're in, I mean, I'm sure we're all experiencing some inflation when we go to the grocery store. There's plenty of pockets of inflation, but overall, with what's going on in the economy, it's a very deflationary.
You have like gas and oil is on the other side of that. So
Exactly.
your food is definitely costing you more,
Right.
but your gas is like crazy low. So
Exactly. And like you said, interest rates make many aspects of real estate, less expensive.
yes, and very desirable right now. So
Yeah.
lastly, do you think, how can you calm people if people are so nervous now? I mean, I'm finding that a lot. People are not putting their homes on the market, and not just me. I mean, we have a low inventory right now, not
Yeah.
just because the people I know are a little nervous, but people in general, where now is the ideal time to sell their house because the interest rates are so low. They get, so much more for their money.
Right. Yeah, no, without a doubt. I mean, I agree with you there. I think, there's a period where people were sort of deer in the headlights and don't want to make a move because, there's just so much uncertainty and anxiety about, people's health, financial situation. But, I do think that it is a scary time, but it's also an exciting time. And it's, during these transitions, it's actually a great opportunity to make those shifts that have been in the back of your mind that you've been thinking about, but not, but uncomfortable doing. Well, we're sort of open and ripe for change.
For change.
Yeah, and it's the like you said, interest rates, people wanting to, make moves, change jobs, they're working virtually, all these things. It's a terrific opportunity to be, acting on those.
To look at the glass half full, to think, where am I going to fit into the modern landscape of careers and work, the way we work. And, it's interesting because I don't think I read an article that people aren't really flooding out of the city. I mean, this thing going on in the city with no restaurants and no pools open, this is not going to last forever.
No.
Quite frankly, there are ways to shut it down really quickly, as they have in other countries.
Right.
So if when we get to the point where the pandemic sort of does get more under control, all the restaurants, the pools, the parks, the zoos, it's all going to open up. I don't think we have to worry that we're never going to eat in a restaurant downtown again.
Yeah,
So.
And without a doubt, we will get through this. There will be a vaccine. Can we predict exactly when that's going to be? But
no.
Actually, that reminds me of a conversation I had with an older client just today who lives in the city, and she has the wisdom of age, that we all realize too late that's how it works. And She was completely calm and just said, "We'll get through this. We've been through plenty before."
The wars, and I mean, if we were not strong as a human race, a lot of things would have wiped us out before this, because there were several, I don't know how many pandemics, but many in the time before medicine. So,
exactly. And the thing I think is actually the coolest part of this, and I know that word is probably a stretch, but I'll say it, is that this period that we're living through will actually be the benchmark, the point of reference for years and
years
years
to
to
come.
come. And if we survived this, if this company survived this, if we as an organization survive this, we can survive anything. And
Yeah.
I find that part about all of this
Yes.
pretty cool.
I love that. I love that. Thank you for bringing, because yes, Deepak Chopra says nothing good happens without chaos. So we have plenty of chaos. Everything's getting shook up, and this will bring us to a better place on the other side.
Absolutely.
We have the faith. Faith. Well, thank you, Jenifer. And I just want to let people know, if anybody has any questions for Jenifer, she's always available. You can find her, just text message me or leave me a message on Facebook, or Jenifer, just look her up, and she's always happy to answer your questions. So
yes,
thank you for putting such a happy spin on Friday afternoon in August. Great seeing you.
Betsy.
Thanks.
Okay.
Great.
Bye-bye.
Bye.